You're listening to the Rent Roll Radio Show with Sterling Chapman. Hey, Rent Roll Radio listeners, welcome back to the show. As always, I'm your host, Sterling Chapman. Today, we're joined by James Maffuccio, who actually grew up right down the street from me, even though he's half a country away at the moment. James, I'm really excited to have you on the show. James has a lot of education about some topics that we've never talked about on the show, so I'm really looking forward to it. So thanks for coming and joining us.
Yeah, you bet. It's great to be here and great to establish that little geographical commonality that we have there. Go Tigers, by the way.
Yeah. So James went to elementary school where at the same school that my youngest son is currently at, and grew up about 3 blocks away from where my whole family grew up. So that's an interesting little fun fact about us. James, can you tell us your story? Tell us what you were, how you got into real estate and what you're doing today.
Yeah, sure. You bet. Well, going back a bit, I did graduate from LSU in 1979 as a civil engineer, and actually went to work for a large oil company straight out of there, and did that for about 6 years, five and a half years, and realized this is not for me to be in the corporate world. So I got my real estate license, and in early 1986, I jumped ship. I haven't received a paycheck from anybody in that many years. So what's that, 36 years. So I've been self-employed in the real estate world. And I started off doing residential development projects in Southern California. And my structure was really using private money, private debt, and which is insanity, by the way, in Southern California real estate development world, because it takes a long time to get projects approved, and timing is everything in that game. If you hit the market right, you're a multimillionaire, brilliant. And if you hit the timing wrong, you can have the best product in the world, but you're going to lose it all. And I've lost it all twice. So I am not proud, but I'm happy that it's part of my education. But, I've lost a fortune. In my world, it was a fortune twice because of the debt structure. And so in 2000, and fast forwarding in 2000, and let's just say 2010, I found myself, at that point, in my mid 50s with 5 teenagers, living in Kansas City. I just moved to Kansas City from California, and really starting over from scratch. So I discovered the whole distressed debt world. Everybody was chasing the opportunities at that point. The mortgage crisis created incredible chaos. But, as entrepreneurs, I'm sure you can relate, Sterling. Chaos is opportunity. So there was opportunity everywhere. Every other house was boarded up in certain parts of Kansas City. So there was the fix and flippers. Then there were the go to the foreclosure auction and buy houses for ridiculous prices at the steps. And I just, was kind of divinely led to go further upstream and look into these. Well, what happens before foreclosure? Like, these institutions have all of this bad paper, and found that you could buy this stuff at a pretty significant discount. And I specifically discovered second mortgages. So these would be like people's, home equity lines, or maybe they bought their house with a piggyback loan, an 80% first and a 15% second, whatever. But these junior liens were the price points that you could buy these for at the time was ridiculous. I mean, I've bought as little as 1% of what the principal balance owed was, and up to 70 or 80% of that, depending on how much equity above our position there would be in the property, et cetera. So anyway, we buy these non-performing second mortgages in cases where most of the time the senior mortgage was actually intact and being paid. So we, we could buy these for pretty significant discounts, and then we would reach out to the borrowers, and the goal would always be to get a workout plan or loan modification, where the borrowers, the homeowners could stay in their home. We could make it really sweet for them because of the discounts that we're buying at. So it really created a win-win-win. It was an opportunity for me to jump back in with very little capital initially. And, I hooked up with my business partner, Bob Frazier, in 2012. And 2011 was my beta test. I bought a handful of these second mortgages and realized, oh my goodness, these things are like gold, the multiples we can make. And anyway, I showed him my business. He thought I was crazy at first, but then he looked at it and said, "Hey, how about I raise capital for you and you just go do deals?" And it was like, "Hey, that sounds good to me." And here we are 10 years later, and we've built a company. I think we've deployed, $80+ million in private capital buying these mortgages. And we have 23 employees, I believe. And so we've been just cranking it out. Now, the other side of our business is we also buy reperforming mortgages or already performing mortgages where there's cash flow, but we buy those at a discount as well and make a really nice yield on those until they pay off. And then we make a nice windfall because, again, if we're buying it at a 70% of what's owed, when the borrower pays it off, of course, they're paying off the full balance, the 100%. So we recover that discount when we sell. So we've built these debt funds out, and we keep running that model. And we've also entered into some other verticals where we've become pretty good at raising capital, and we love educating people on all things passive investment and get at least some of your money off Wall Street and into some uncorrelated private placements. I'm sure you can relate. And so we've done everything from, coming up alongside of other developers and other syndicators with their various business models. And so what we do is we vet out not only the deal structure or the vertical business model, but we also vet the sponsor pretty heavily. And then we invest alongside. So we've launched a podcast ourselves, Invest Like a Billionaire, it's called. And so we love this whole alternative investment world. We keep running our debt funds, and they keep growing. And it's just a fun time considering where I was 10 years ago. It's been a real blessing to get to where we are today. So
that's awesome. So I love I love the name of your podcast, Invest Like a Billionaire. And I have a lot of questions, selfish questions, and I say this all the time, but I started this podcast so I could interview really smart people and ask.
Isn't it the truth? I mean, this is the best way.
I don't even care if anybody else listens. I can get an audience with anybody with the show, and I have all these questions about my own business, and I can pick the brains of smart, successful guys like yourself. So I've got some questions about capital raise and how you go about raising $80 million. But before that, I want to say, so I'm in the process of kind of relaunching all of my marketing materials, redoing my websites, redoing my lead magnets and my drip campaigns and my blogs and all that. And as I'm rewriting the book, I'm hung up on this concept of, what we do with private placement is how billionaires invest. That is how these big institutions have always made money. And it has just been sheltered from the general public who say, "Oh no, you got to go put your money in a mutual fund. You got to go invest it with, this big institution that's going to fee the hell out of you and put it in, an index fund." And that's not where money is truly multiplied. Where it's multiplied is these like private placement, leverage buyout scenarios where we're adding value, where we already know the assets where, I always say there's no wishing, hoping, and guessing in what we do, right? I'm buying undervalued assets, and I have a very well thought out, meticulous business plan to get it to the market value. That's different than throwing your money in Bitcoin or throwing your money in the S&P 500 and just hoping it goes up or I think Apple's going to do great. I mean, it's a completely different ball game, and the returns show it. So why can we not make this mainstream? What is preventing the general population from reaping the benefits of doing it the way the billionaires and the insurance companies and the retirement funds have been doing it for half a century?
Exactly. And that's our whole thesis to our, Invest Like a Billionaire. And frankly, my world, from starting from I got out in 1986, started doing real estate. I've been doing transactional work as a realtor, but
You've been doing real estate? You've been doing real estate as long as I've been alive. I was born in 85.
Awesome. All right. So I mean, the very first project I did was pulled together family and friends money. I just did a simple partnership agreement that I was going to say got online, but there was no online then. As an attorney had a cut and paste deal for me. But it was difficult even up until fairly recently to raise private money in a way that was legal and scalable. But some laws have changed, and so actually the barriers of entry now are lower, and so individuals, and we encourage people like keep some money in stocks, but there's a place for that, But the thing of it is, when I wake up in the morning, if some dictator somewhere does something stupid, or Joe Biden gets out a coherent sentence or not, I had to throw that in. The value of my portfolio and the value of your portfolio, I don't look at a chart and say, oh my goodness, our mortgage portfolio just tanked 3% because some politician did something stupid or smart. It's just, no, it's a piece of property that this family lives in and they pay their mortgage. And the only reason they're going to stop paying their mortgage is loss of a job or loss of income. And if they do that, we can help them out. And if we can't help them out, we'll take over the asset, which we can put a renter in, and the renter will pay us more or as much as what the mortgage payment was. How can that ever go down in value, with any kind of a long term? So it's not correlated to the financial markets, which are fickle at best. And over the long haul, equity stocks go up, but not at a very steep curve. The thing of it is, the drawdowns are so huge that if you're in a situation where you have to get some of your capital out and the market's down, too bad. But we look at our assets, or like you're in the apartment world, same thing. It's like, when's there ever not going to be the need for people, workforce housing, for people to be renting your units? And so it's just it's such a smart play. And the fact of the matter is, retail investors can participate now. So what we're finding is, and this is kind of my thesis on it, Sterling, is that individuals are discovering the world of private investments, private placements, syndications. But the problem is, then you start getting online and searching, and you can start signing up for email lists and podcasts and blogs and everything else. And now your inbox is jammed because there's 15 apartment deals every day, or storage deals, or sure. We got involved in a Bitcoin mining deal, and we're not even pushing that out to our investors yet because I want to beta test that. But the point is, it's like, okay, now what do? I don't know who's real. I don't know who's fake. Everybody's got a good marketing shtick, It's like the multi-level marketing thing of 20 years ago. It's like everybody's pitch sounds perfect, until you dig in and find out, they're just able to raise a lot of money because they're good marketers, but they're buying crappy projects that don't pencil. So this is creating the need for people like you and I to step in and become at least a little bit of an accountability and a little bit of a due diligence and credibility factor, where we can say, no, this hair is this color for a reason. and the other guys that I work with are very seasoned. We have a banker, who's been underwriting commercial loans for banks and knows how to tear a business apart and look at it. Another guy that's been in private placement. In fact, he came on with us about 3 or 4 years ago, and he was a chief counsel for this major, mutual fund company. And they're a $500 billion company, but he got involved in private placements himself personally. And we had him as a guest on our podcast. He's actually works with us now. And we asked him, well, how many private placements are you in? And he says, well, put it this way. I get an average of 100 K1s every year. So this guy is what I call a very active passive investor, right?
Sure.
But you start looking at these deals, and we've become very good at vetting not only the deal, but the sponsor, because I want to make sure that the young, smart person that we're investing in their storage deal, then you start looking at it and say, yeah, I got this deal going and 15 more deals on the boards. And well, how are you going to manage the growth? Well, and really they always have an answer for it. But the real answer is like, you're really not going to manage the growth. You're just going to scramble and buy everything you can. And we're not going to put our money with an operator like that. So there's a lot more to the game than the marketing pitch or the executive summary, And so we're positioned to be that for passive, these investors that are just discovering the whole world of what you and I do all day long. And so it's exciting. It's a great time. It's a great time for, there are crowdfunding sites, and some of them are actually pretty good, that people with, a few $100s can literally invest in a real estate project. And I'm not, again, buyer beware, but, a lot of people think, well, I don't I haven't discovered that world yet, but I invest in REITs or, real estate investment trusts. But again, those act just like stocks.
Sure.
They go up and they go down based on the market sentiment. So we love what we do, and love this whole world, and love helping people. Honestly, helping people, as you said, help them invest like a billionaire. This is the way the wealthy have created and preserved their wealth, is through these kinds of investments. And it's fun to me that the regular folks, like myself, get to discover it and participate in it. It's phenomenal.
So how do you go about raising $80 billion?
1 million at a time. We did our first fund. We raised 1.5 million, and it was really my partners. It was a family and friends deal, Mm-hmm. And so, we obviously put together our little business plan and brought that out. And we registered it. It was a 506B offering. Mm-hmm. So, private placement, just talking to people. And we started there, and then we moved as we started gaining some credibility and track record. We expanded that out. Then we hired, we hired actually a young man who's the banking guy, and he's pretty good at capital raising. And, we did all the things that you're probably doing. We're guests on podcasts. We host our own podcast. We do a little bit of we do some Google advertising, because with a 506C structure, which is for accredited investors, you can do some general solicitation. And so, you start building a track record, and you start building a presence. And before you know it, we have wait lists now for our distressed debt funds. We can't place all the money that wants to invest in our funds.
I think a lot of people are in that situation.
The bottom line is there's way more money out there looking for us, looking for good opportunities than there are opportunities. And I don't think we've come to the bottom of the barrel on opportunities, but it's really just getting in front of the investors and honestly doing what you say you're going to do. We're very anal about that. We send out our monthly checks, quarterly reports. We're very available. Even the principals, myself and my partner, are available to our investors. We have redemption processes, so there's some level of liquidity in our funds. If people need to get their money out, we work with them. It happens very rarely, because we're making, they're making really nice returns. Where else will they go? But it's taken some time to get there. But we've had some pretty big players come on board and put $1 million with us, which we find out is just dipping a little toenail in the water to see how we do. And then after you do what you say you're going to do, and they see some success, all of a sudden it's like, hey, you have any other offerings? And we have some people that invest in every one of our funds, because we've been doing like serial funds. We'll raise $10 million. And then deploy that 10 million. Of course, there's overlap in that timeline. And then we'll harvest, when we're getting the workouts and the successful exits, we start distributing the money back to the investors. But all the while that's going on, we're opening up the next fund, because we always want to have dry powder and be able to buy the assets as they become available. So, you just get into the flow of capital. Right? It's one of our core functions is capital raising. So, we've invested in that. We have a staff. There's 3 or 4 people that are dedicated just to the whole capital raising world. So it's work, but it's very rewarding when you have a good track record. So
awesome. So what would you do differently if you could start over again?
Oh my goodness. I make this statement all the time. I wish the 30-year-old me would have met the 60-year-old me. Of course, the 30-year-old me might have been too arrogant to think that he
wouldn't have listened.
So I like to tell people, that they say, well, what's the one takeaway? I say, well, people say the best teacher, the best way to learn is through your mistakes. And I say, not really. That's really the second best way. The first best way would be to learn from my mistakes, or some other people's mistakes, right? But the fact of the matter is, human nature being what it is, usually we won't go, especially entrepreneurs, people that have an entrepreneurial bent. They, for some reason, we kind of feel like we have to get in there and, get knocked around a little bit and learn it ourselves. But I would have done more of a steady plodding business model instead of just swinging for the fence and doing development projects. I would have probably stuck with the transactional business because I was actually pretty good as a realtor. I mean, I love people and I'm pretty intuitive in terms of figuring out what does this person really want or need. So I could have stuck with that and as kind of a day job or a steady income deal. And then I was just telling my daughter, I was talking to her yesterday and about real estate. And I said, one thing I would have, if I'd have had some form of steady, stable, more dependable income and not just going project to project, my thesis would have been never sell your real estate.
Sure.
Just hold. I mean, I'm talking about your personal real estate. So I went back and looked on Zillow at all the properties I've owned from the very first little condo I bought in Ventura, California for $75,000. And I looked at all that. And if I had kept all the, I'm not talking about a lot of the investment properties and things that are fix and flips or stuff that was from the beginning, it was going to be a sell for profit deal. It's just, I mean, the number of digits that portfolio would be worth today with mortgages paid off, because a lot of it I was buying 30 years ago, it's incredible. So that's what I would have done differently. I would have had a little bit more of a longer term approach. I would have had the discipline of some sort of a business that paid me more regularly until I got to where the passive income from my investments would be, very easily would cover my overhead. And then once you get to that point, you're just off to the races because now you've bought all your time back and everything you do, can be towards building a profit or a profitable future instead of waiting for the next payday. So that's probably the main thing.
Awesome. I guess this question could sound like the same as the last one, but I feel like it might be different.
Which probably means I didn't answer your question.
No, you definitely did. What advice would you give to somebody else that's just getting started?
So somebody else getting started, I'm going to assume you mean just getting started in the whole real estate / alternative investment world.
Yes.
So, okay. And maybe they already have I'm going to assume this is somebody that has a day job, so to speak. Sure. So they're not like a trust fund, hey,
right.
I have like $10 million. What do I do? Because I would tell that person, actually, a lot of what I would say would be the same. And that is, to not get yourself educated in a world like we're in right now is insane, because there is so much access to so much great information for so little cost, like people that are watching your podcast right now. It's incredible. Go to conferences. I'd say read books, because I actually still read actual books, but, attend webinars, go to podcast, go to conferences. I mean, you go to some of these conferences and there's tons of them in the real estate space, and there's specific ones to the debt space. That's where I learned everything, how to take my generic real estate ways of thinking and toolkit, but convert it over and reposition it into the debt space. I did it by going to conferences. We hired some of our key players that are still with us that I met at conferences. So we found deal sources and we found people that buy our deals, through 10 years of attending these conferences. So figure out which vertical you want to be in. And I would say start with something that's really, kind of non-sexy and more steady plotting, and just learn it, and get mentored. Don't be shy about reaching out to people and say, hey, I want to learn this business. I'm willing to do some work for you just to see how you do what you do. Is that okay? And there's all kinds of people with mentoring programs. And again, you got to be careful and you got to talk to a few people that have used them and make sure that you get the right person. But there's so much good information available, Sterling. I would say that's number one. And even information on how to raise capital. You don't even have to reinvent the wheel on that. And there's platforms that'll, if they like you and you do your due diligence, they'll put your deals on their platforms and you get, investment capital coming to you before you know it. So jump in, start learning. And by the way, pull the trigger. Find your first little deal, whatever it is you're going to do, and just get started. And yeah, it may be a failure. It may not be a home run. It may only be a single, but there is no better teacher than jumping in and doing it.
I tell people that all the time. People that want to do their first deal, they always send it. Is this a good deal? Is this a good deal? I'm like, it doesn't matter. it doesn't matter if you lose money on your first one. It's 10 times more important that you take that mental step and
That's
get
right.
over that fear hurdle. You know, I lost tons of money on my first. I mean, I still have it. It ended up pretty much appreciating for more than I lost. But like, if I look at my first house that I bought, you know, and I bought it for cash flow, I had so much stuff go wrong those first 2 years. Like it never cash flow. You know what I mean? But you
Cash cash can flow in two directions, right?
Yeah.
Towards you and away from you. But anyway.
So no, that's so paramount is to go and take that first step, because that's where a lot of people get hung up. But I want to hop over to our radio round a little bit. It's just 3 quick questions to help our listeners get to know you a little bit better. The first question, you mentioned you like to read books. I like to read books still too. I've got a good lineup of them back there. What's your favorite book?
Well, you asked me, it's my story. So the Bible is my favorite book. That's the one I try to read every day. And
Awesome.
it's you know, in the physical fitness world, you know, people tell you build your core first, right?
Sure.
And so, I believe in our life, we should build our core, and that's our spiritual life. And so that's the applicability of that book to all of life is, to me, it's foundational, it's core, and it instructs everything else that I do. So honestly, I'm not really in the middle of reading any business related books right at the moment, because I've been really just absorbed in the podcast world. And, you know, I find that, you know, books are great, and they're great for principles mostly, but real-time information is so important in today's day and age. So actually, you know, I watch and listen to a lot of podcasts, and we do our own podcast, and you're getting real-time, boots on the ground, actionable information when you do that. So that's probably as far as input and education, it's probably right now, it's probably podcasts and webinars would be it.
Nothing wrong with that. I find, having read a million, business and real estate books are dry. I just can't make it through them anymore. I mean, I've read so many, and I know so much. Like you said, it's the same principles over and over again, right? I'll still listen to the podcast to catch some real, like, oh, they just changed the tax laws. Oh, they just changed the SEC regulations.
Price.
Like, but that real estate book that was written in 92, like the first 6 real estate books that were written in 92 were great, but like, I can't read a 7th one.
Yeah, no, I hear you. I mean, you know, I was at dinner with my, you know, 26-year-old daughter last night, and, you know, she wants to get involved and interested in investing in real estate and all that. I mean, I told her, you know, go buy Rich Dad, Poor Dad. I mean, it's a great 30,000 foot view. And so she did. She texted me after on her way home. She stopped at Barnes and Noble, a real bookstore, and said, "Dad, look what I got." And I'm like, "Good for you. Read it and let's get together and talk about it." So yeah,
that's awesome. Awesome. What's your favorite quote?
Oh my goodness.
I usually give people a heads up, but because I was in a hurry before our show, I forgot to tell you.
Do unto others as you would have them do unto you.
There you go.
The golden rule. The golden rule.
What's your favorite thing to do outside of work?
You know, I love skiing. Actually, that's, you know, one of the reasons we moved out here to Colorado. So I love all things mountain. My wife and I, you know, we're in our mid 60s, and we mountain bike, and not aggressively, but we just love the outdoors, and, you know, exercise, and, you know, I want to be I want to be healthy. You know, I want to be around when I'm 85 years old. So
speaking of that, I was in Colorado 2 weeks ago skiing. And I hit the ground pretty hard, and I'm still not healthy from it.
Oh man,
I hadn't been in a couple years, so you know that I was about 5 minutes into it, and I said, man, I was feeling cute, I was feeling cocky, I really got this. So I started going fast, and man, the second my head got big, it just went straight into the snow.
Oh man, where were you skiing?
We were at Keystone.
Yeah. So I go there often. I'm Breckenridge and Keystone, between those two. That's where I like to ski. So
I was in town for for Joe Fairless's Best Ever conference. And while I I went 2 years ago, and it was in Keystone. So we went.
Yeah, I went. I was there.
We went a few.
I was
days,
there.
We went a few days early and skied before, and then this go round, because it was in Denver, we tacked the skiing onto the end.
So I spoke on a panel at the best ever this year at the Gaylord there. So awesome. I guess we probably were ships passing in the night there and didn't notice. Well, I didn't know you at the time. So next best ever, I'll see you. Sure. We'll shake hands. You going to Salt Lake City next year?
I am. I'll probably make every one of Joe's conferences. That's the best.
They're good.
Best one I've been to for sure.
I agree.
Well, where can our listeners find out more about you, learn from you, invest with you, get in touch with you?
Best place is just visit our website. It's aspenfunds.us, not .com, but .us. And Aspen Funds is one word. And yeah, just there's a place there to just put your info in, and you put a comment and say, hey, saw you on Sterling's podcast. Would like to get some more info, and we'll definitely reach back out and help direct you. And a lot of times we direct people to other people's deals, but or business models, because it's probably just like our distressed debt space. I wouldn't tell my best friend today to jump in at a mom and pop level, because it's gotten so regulated. Now we've already invested the time, we built the infrastructure, we have all the attorneys in all 50 States. And so, once you've paid that price and we're licensed, you stay in and it's great. But back when I got involved, it was still the Wild West. It was pretty easy, but I tell people, hey, go get involved in, some other business model that's a little bit lower barrier of entry.
Awesome. Well, James, thank you so much for joining the show. Thanks for sharing all your wisdom with us. And I look forward to seeing you next year at Salt Lake and keeping up with you on your journey in the meantime.
Yes, sir. My pleasure, Sterling.
Thanks for tuning in to the Rent Roll Radio Show, brought to you by Crestworth Capital. We hope you enjoyed the show. And if you did, please hit the subscribe button and leave us a rating and review. You can also visit us at crestworthcapital.com or rentrollradio.com, or follow us on Facebook at Rentroll Radio or at Crestworth Capital. If you would like to reach us, feel free to shoot us an email at info@rentrollradio.com or sterling@crestworthcapital.com. We hope you come back next week to join us on some more of our journey. Until then, happy investing.